Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Let's talk about the Vietnam Dong. It continues its downslide, but when will it stop? That's a big question. Before we get started, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, go to our friends over there at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you will get a free half ounce of silver. All right, so this is what I'm talking about. It says the dollar's rise to nearly 25,000 dong increases Vietnam's foreign debt burden. So when they have to pay their foreign debt, they have to pay it off in dollars. So if it takes more of your currency to buy less dollars, it becomes more expensive to you. That's the downside to manipulating your currency in the first place. It says, while a weaker dong may help exports, the higher cost of imports is likely to feed the inflation. This is what I was talking about earlier on the Iraqi dinar. The weaker dong helps with exports because it's cheaper to manufacture in Vietnam because of the weaker dollar. But if you got to do a lot of importing, it's going to kill you. Said the U.S. dollar's rise against an Asian counterparts is making it harder for the region to repay dollar denomination debt, and Vietnam is no exception. So what happens when we continue to raise the interest rate on the U.S. dollar and it continues to get stronger and other currencies continue to get weaker? Well, you're going to start causing collapses around the world. The State Bank of Vietnam announced a ceiling rate of the Vietnam Dong. That's 24,846 Vietnam Dongs for every $1 US. That was on October the 19th. This last Wednesday morning saw the US dollar rise sharply against the Vietnam Dong compared with its previous sessions, according to the economic and urban newspapers. So the Vietcom Bank listed the buying price of the dollar at 24,240 Vietnam Dong and the selling price at $24,550. This is an increase of 90 Vietnam Dongs for buying and an increase of 320 Vietnam Dongs for selling compared with the previous listed levels. On the free currency market in Hanoi, the dollar's buy and sell rates are around 24,662 for buying and 24,722 for selling. A former board member and director of Vietnam's Prosperity Bank said the dollar's rise against the dong will have a significant impact on the country's public debt repayment obligations. Vietnam's foreign debt payable in U.S. dollars in terms of the dong will increase, and this will increase the burden on repaying the principal and interest on the national debt. And this is happening to countries all over. The Ministry of Finance sent a report to the Prime Minister in March saying that the government will have to pay more than, it looks like, 100 trillion is what it comes out to. 100 trillion or 40.7 billion US dollars of public debt from 2022 to 2024. Yikes. Now, it's one thing if they're paying off their own debt to themselves, like we do here in the United States. Then you want the cheaper dollar. A cheaper dollar to pay off your debt is better for you. The ministry said that by the end of the year, public debt will account for about 45 to 46% of the gross domestic product. Government debt will be about 41 to 42% of GDP, and the country's external debt will be about 40 to 41 of the GDP. The target of Vietnam's direct debt repayment obligation compared to the state budget revenues is expected to be about 22 to 23%. This is not good. So Vietnam cannot keep devaluing their currency because it's costing them too much money to pay things off in US dollars. On the other hand, if they increase their dollars and get more purchasing power, then their exports are going to go up and they're going to be less competitive on the market. It says since the beginning of the month, Vietnam State Bank has pumped nearly 120 trillion, that's Vietnam Dong, which is 4.9 billion into the market, reducing the annual interest rate to 5% in recent days. However, according to Nugent, a recent increase in the exchange rate band between the dollar and the dong by the State Bank of Vietnam rose from 3 to 5%, and the current increase in the value of the foreign currency will have a limited impact. So here's the problem with Vietnam. It says Vietnam relies heavily on exports. That's why they devalued their currency. So overall, the weak dong doesn't have too much of an impact on Vietnamese economy. On the other hand, the lecturer said imported goods will cost more and may be harder to sell, and Vietnamese traveling abroad will find their money won't go as far as it used to. Some say the dong's depreciation against the dollar may not give much of a boost to exports. So, talking about being stuck between a rock and a hard place. If you do what you should have done already, which is increase your exchange rate on your Vietnam dong, then you wouldn't be getting hit so bad with the increase of value of the US dollar. The problem with increasing the exchange rate for the Vietnam dong is the higher cost of exporting, which would affect their economy. Again, right here it says Vietnam dong extends loss against dollar. It's down 0.16 to about 24,570 dong for every $1. So there has been a 10-day, I think it was, actually it was 12 altogether, decline in the value of the Vietnam dong against the US dollar. You know that old saying, what goes up must come down, while the same can be said in the opposite direction. What goes down eventually will come back up. So is this a time to accumulate more Vietnam dong? Not for me, but if it keeps going at this rate and it gets down much lower, I might consider it. Think cost average, because eventually it's going to rebound. But I'm more interested in finding out what direction this world wants to go into when it comes to this digital currency crap. I definitely don't want to be involved with that. So before I start dumping money into foreign currencies, I'm just going to wait and see what direction the wind blows. And based on that, I'll decide from there. Anyways, that's it for the Vietnam dong. Leave your comments down below and I'll check them out and I will get back to you later. I'm out.